Thanks for tuning in to your daily dose of quick real estate updates, local housing trends, and market data, plus tips, tools, and strategies to help you buy, rent, or invest with confidence. You're now getting ready with RealiCare Reports, powered by the innovation team, Cami and Rex. Now go grab your favorite morning breakfast, coffee or tea, and let's enjoy today's episode.
Welcome back to the Deep Dive. Today, we're taking on a pretty interesting task.
We are.
We're analyzing the latest real estate stats for Brevard County, Florida. We've got the numbers for September and also the whole third quarter of 2025.
Yeah, these are straight from the Space Coast Association of Realtors. Lots of data, lots of charts.
Exactly. And look, our mission here isn't just to read you a summary. We want to cut through that noise, find the key takeaways, because something interesting is happening.
Definitely. It's almost like, well, it is like two different markets running in parallel right now.
Two markets. Explain that.
Well, you really have to look closely. The data for single-family homes, we'll call them SFH, it tells a very different story than the townhouses and condos, the THC market.
Different in what way? Like activity, pricing?
All of the above. Activity, pricing, inventory, who has the power, the buyer or the seller. It really splits depending on which property type you're looking at.
Okay, so let's break that down. Where should we start? Maybe the single-family homes. That seems like the bigger chunk of the market usually.
Yeah, let's start with SFH for September 2025. That's where a lot of the energy seems to be.
Okay, energy. So closed sales, they were up.
They were up 12.6% compared to last September. We're talking 839 houses sold versus 745 the year before. So yeah, decent activity.
That's quite a jump. And who's buying? You mentioned buyer power.
Well, this is fascinating. Cash sales, they increased by a full 20% year over year.
Wow, 20%. So despite interest rates being, where they are.
Exactly. It suggests there's a pool of buyers, maybe investors, maybe just well-capitalized folks who aren't really sweating the mortgage rates. They're just buying with cash.
And that kind of fuels the activity, I guess. What about deals in the pipeline? New pending sales?
Those look pretty healthy, too. New pending sales were up 5.3%, and new listings were up slightly, just 0.7%.
Okay, so summing up SFH for September, busy, lots of cash, deals getting signed. But what about the price? Did all that activity push prices up?
No. And that's the paradox, isn't it? The median sales price actually dipped a little. It was down 1.8%, landing at $378,000. Last September, it was $385,000.
So basically flat. Stable, maybe?
That's how the source report puts it, relatively stable rather than rising. It seems sellers are prioritizing moving the property, getting the sale done, rather than holding out for big price gains right now.
Interesting. Trading speed for appreciation, maybe? What about inventory? Are buyers finding more options?
A little bit more. It's still pretty tight, but there's some relief. Month supply of inventory, it climbed 7.3% to 4.4 months.
4.4 months. Remind us what that means.
Basically, if no new houses came on the market, it would take about 4.5 months to sell everything currently listed. It was 4.1 months last year.
So moving in the right direction for buyers, but still technically a seller's market or close to balanced?
Getting closer to balanced. That 5 to 6 month range is usually seen as truly balanced. So 4.4 is an improvement for buyers, but sellers still have a decent position.
Got it. Now, before we switch gears to condos, we have to touch on distressed sales for SFH in September. Some of those numbers looked, well, dramatic.
They did. Traditional sales, which are most of the market, they were solid, up 12%. Median price there was around $380K.
Right. But the foreclosure and REO sales, the bank-owned stuff?
Yeah, those were up 166.7%.
Whoa. Okay, but how many actual sales was that?
That's the key context. It was only 8 closed sales. 8. And the median price was lower, $336,500.
So, tiny number, huge percentage jump. What does that signal?
It's like maybe a little warning light. It suggests some financial stress is starting to pop up in a corner of the market, even if it's small right now. Short sales were minimal, just one.
Okay, something to watch. So, if SFH is this active but stable-priced machine, what's happening on the townhouse and condo side? You said it was a different story.
Completely different. Yeah, if SFH was humming along, the THT market in September felt more like hitting the brakes.
How so? Sales down.
Yep. Closed sales dropped 10.1%. That's 161 units sold compared to 179 last September. The momentum just wasn't there.
And the prices, if SFH prices were stable.
This is where it gets really noticeable. The median sales price for townhouses and condos, down a significant 12.8%.
12.8%. That's a big drop. What's the actual price point now?
It landed at $255,000. A year ago, it was $292,500.
Ouch. That's a serious correction. What's driving that? Is it the inventory?
Absolutely. Remember, SFH inventory was 4.4 months?
Right, improving for buyers.
Well, THC inventory jumped 18.8% to reach 7.6 months.
7.6 months. Okay, that's definitely buyer's market territory.
Oh, for sure. Over 7.5 months of supply. The report itself says it reflects reduced sales activity, softer prices, and a higher supply, giving buyers more negotiating power. No ambiguity there.
And that lack of momentum shows up in cash sales too, right? Compared to SFH.
Big difference. SFH cash sales were up 20%. For THC, only up 2.3%.
So the cash buyers aren't rushing into the condo market, even with lower prices.
Doesn't seem like it. Maybe they think prices have further to fall, or maybe the single-family homes just look like a better bet right now. Traditional sales were also down, about 11.2%.
Any distressed activity in THC for September?
Very little. Just one foreclosure sale and one short sale reported for the month. So this price drop isn't really about distress. It's pure supply and demand.
Too much supply, basically.
Exactly.
Okay, that September data paints a really clear split. But was September just, a weird month? Let's zoom out. What did the whole third quarter look like? Does it confirm these trends?
It pretty much does, yeah. Looking at Q3 for single-family homes, things were broadly consistent.
Consistent how?
Well, overall, closed sales for the quarter were down just slightly, minus 0.6%. The median price over the whole quarter softened a bit more than just September, down 2.3% overall to $375,000.
Still fairly stable, though.
Right. And new pending sales edged up 1.8%. New listings were almost flat. So it confirms that picture of a, generally balanced market with steady activity.
But what about that distress signal? Did that continue through the whole quarter for SFH?
Ah, yes. This is where it gets even more interesting on the quarterly view.
Mm-hmm.
Remember that 166% jump in foreclosures in September was only 8 sales.
Yeah.
Okay, over the entire quarter, foreclosure REO sales were actually flat, 0.0% change compared to Q3 last year. Still 16 sales total.
Okay, so that monthly spike didn't necessarily translate quarterly, but what about short sales?
That's the number. Short sale closings for SFH in Q3 were up 700%.
700%. Okay, again, how many sales are we talking about?
Still small numbers. It was 8 closed short sales for the quarter, median price around $275K, but a 700% increase.
Explain short sales again for everyone.
Sure. A short sale is when the homeowner sells the house for less than they owe on a mortgage, and the lender agrees to take that lower amount. It basically means the seller is underwater.
So even though it's only 8 sales, that massive percentage increase over a full quarter suggests a pocket of real financial stress emerging at that lower end of the SFH market.
Exactly. It feels like a more significant indicator than the 1-month foreclosure blip.
Got it. Okay, now let's check the Q3 view for townhouses and condos. Did the slowdown continue all quarter?
It did. The quarterly numbers confirm the trend. Closed sales were down 8.1% for Q3 overall.
And prices?
Median price was down 7.8% for the quarter, landing at $265,000. Still a significant drop compared to SFH.
And were new deals and listings also slow?
Yes. Both new pending sales and new listings actually declined for the quarter, down 3.5% and 4.4% respectively. That suggests less activity, less confidence maybe, from both buyers and sellers entering the market.
And the inventory, did that stay high all quarter?
It sure did. The month's supply for THC held steady at that 7.6-month level for the entire quarter.
Wow, so that high inventory, that buyer's advantage, it wasn't just a September thing. It was the reality for the whole summer.
Seems that way, a persistent supply issue.
Okay, so let's synthesize this. We've looked at September, we've looked at Q3. What's the big picture takeaway for someone listening? Maybe they're buying, maybe selling in Brevard County right now.
The biggest takeaway is you have to know which market you're in. It's genuinely operating as 2 distinct environments.
Right. So environment 1, single-family homes, what's the summary there?
SFH, you've got active sales, good volume. But pricing is stable, maybe slightly soft compared to last year. Inventory is balanced, around 4.4 months. It's active but competitive.
Okay. Environment 2, townhouses and condos.
THC, much slower sales activity, significant price drops compared to last year. And the reason's clear. High inventory, 7.6 months supply. That gives buyers much more leverage.
So inventory is really the key differentiator here.
It absolutely is. SFH inventory is nudging towards balance. It rose about 7%. But THC inventory jumped almost 19%. That signals a fundamental shift in buyer power and, frankly, property values in that segment.
And we saw those two really dramatic numbers that sort of capture the split. That 20% jump in cash buyers grabbing SFH in September.
Yeah, showing where the demand and confidence still is.
Contrasted directly with the nearly 13% drop in the median price for condos and townhouses in that same month.
Exactly. One side sees eager cash buyers, the other sees evaporating price power.
So wrapping up this deep dive, the data shows, I guess, a resilient SFH market that's finding stability, maybe adjusting to the new rate environment.
Right. But clearly facing price pressure, particularly in that multifamily, the THC segment, driven by that oversupply.
Okay, so before we go, leave us with a final thought, something for people to chew on as we head into the end of the year, into Q4.
Well, given everything we've seen, the softening prices overall, the really high inventory in the condo market stuck at 7.6 months. You have to wonder about that 700% jump in SFH short sales in Q3.
The stress indicator.
Right. Is that just a contained issue at the low end? Or could it be an early sign, a canary in the coal mine perhaps? Could the pressure and instability we clearly see in the condo market start to bleed over and challenge the price stability that the single-family home market has managed to hold on to so far?
So watching if that distress signal widens beyond just those few short sales.
Exactly. If the THC market doesn't find its footing and absorb that inventory, does that financial stress eventually creep across property lines? That's the big question mark, and definitely the thing to watch very closely as Q4 unfolds.
A provocative thought indeed. We'll have to keep an eye on those numbers. Thanks for breaking it all down.
My pleasure. Always interesting to see the data tell a story.
Well, that wraps up today's episode of Reality Reports, where real estate meets real life. For more updates, tools, and insights that will help you buy, rent, or invest with confidence, be sure to follow, subscribe, stay connected, stay informed, and stay ready. Until next time.